So to set the stage for the audience, could you guys just go down the line and introduce yourselves and respective protocols briefly? Let's start with Yenwen.
Oh, sure. I'm Yenwen. I'm one of the co-founder of Perpetual Protocol. Perpetual Protocol is decentralized DEX, AM DEX, and we trade perpetual swap. So trader can get like 10x long and shorts on our exchange, get leverage, and and trade. Yep.
Awesome.
My name's Tyler Ward, and I'm one of the co-founders of BarnBridge. BarnBridge is a protocol that helps users manage risk across the DeFi ecosystem in various ways. So yeah, that's why I'm here.
I'm Teddy Woodward. I'm the co-founder of Notional Finance, and Notional is a fixed-rate lending and borrowing protocol on Ethereum.
I'm Ainsley. I'm the product lead at Dex Labs, and we're an R&D contributor to Derivadex, which is a decentralized derivatives exchange, also working with perpetual swaps. So happy to be here.
Awesome. So to start this out, yesterday I saw an article from CoinDesk where the FTC just fined Oki DAO. They're a leverage trading, lending, and borrowing protocol, and they fined them for about $250,000. And so according to CoinDesk, the order targets Oki for offering illegal off-exchange trading of digital assets, registration violations, and neglecting to adopt a customer ID program. And this is all required by the Bank Secrecy Act compliance program. So like this morning, I tried to go on the Perpetual protocol. You guys restricted me because I'm in the United States, and you saw my Florida IP address. So I was able to connect though right away to BarnBridge and Notional without issue. And you guys don't offer trading, but it doesn't seem out of the question to target protocols offering fixed income products either. So does the future of DeFi have KYC and IP restrictions, and how would you guys go about implementing that? Would you just follow the rules, or would you completely not offer products to people in the United States?
I think I would move to Iceland and be an expat. No, I mean, so like at some point we have to hope that regulatory structure will come into the space. Like at the end of the day, I think my long-term plan is that I plan to outlive like some of the people that have put these financial regulations in place, and I want to have a long career by trying to follow the rules as best that I can. No technology has ever failed by being too disruptive, like even you would say nuclear weapons, right? Like when you look at the technology that came into that, right? Like there's going to be regulations where you're going to have to follow the rules, but we will as an ecosystem outlive some of the like outdated laws that are ultimately in place. And so if we do our best to not be like bad actors, like a BarnBridge and a Notional, like, yes, we need like a way for us to be regulated. And if they make us KYC, then we'll have to start companies that allow KYC interfaces to exist so that you can access these DAOs. If the US government makes me do that, then I mean, we have to follow the rules, right? But at the end of the day, we need to also have reasonable regulatory frameworks, and they will come. Like, it's not like the US government thinks that we're all like big bad guy criminals. We need to make sure we're not stealing users' capital and that we're acting as good actors. And as regulatory clarity comes into the space, which it will eventually we will need to follow those laws and the framework that they set forth.
Awesome. Teddy, you got anything to add?
Yeah, I was just going to say, obviously, if there are rules that we have to follow, we're going to have to follow them. I think that, thus far, it's just not been completely clear what we do need to do and what we don't need to do. There are some obvious red lines in terms of like, OFAC sanctions. So there's like there's a sanctions list of addresses that are not okay, and like Notional will restrict those addresses from using the protocol on sort of the UI level. Now there's like, but it's not clear, you know, just because like an open source protocol that is non-custodial, where we do not have administrative access. It's a different thing than like a custodial lending business, like just a traditional lending business. So it's not clear how the existing regulations should apply, and I think that the thing that you're bringing up that kind of came out yesterday is it's like it's not great because it is sort of like, I think a lot of people in the space have been operating under this assumption or assumption, belief, or hope that this new kind of organization, like a decentralized protocol, would be able to operate under a different set of rules than existing traditional businesses, and at least this suit raises the prospect that that is not true. And so, I would just say that it's an evolving thing. It hasn't been clear what we have had to do, and we will do what we do have to do, but it's not clear yet what that is, and I suppose it'll become clear over time.
Awesome. You got anything to add, Ainsley?
Yeah, I think one thing to keep in mind with all of this is what's the objective? Like, what's the objective of a DAO? The objective of a DAO is, in my opinion, it shouldn't be to avoid or find a loophole to get around regulation. The objective of DAOs is so that things like centralized exchanges can have a new level of transparency and accountability to their users, who are now like the people that are the decision makers at these projects. And so I think that's something that has always been the objective for me and is pretty much in line with a lot of these regulatory goals. I mean, you have to find a way to support them infrastructurally, but that doesn't really, it's not at cross purposes to what I think the goal of a DAO is.
Nice. Okay. Moving on to, let's start talking about Ethereum a little bit. So, the Ethereum merge was successful, and we're now on to a proof of stake network. So post-merge and with this kind of a roll-up centric focus, is Ethereum still the settlement layer of the future? Because I know that Perpetual Protocol and BarnBridge, or Perpetual Protocol is on a roll-up, and BarnBridge is looking to be on Optimism, if I'm correct. And I'm curious, is Notional looking to expand into roll-ups? And same thing with Derivadex. Teddy.
Yeah, so Notional is currently on Ethereum L1. We do intend to pursue L2 integrations. It's like not immediately the next thing we're doing, but I expect that we'll do that next year. But I think that there's a certain section of the industry that sort of sees L2s and Ethereum L1 as effectively equivalent, and I would say that is not true from a security perspective. So, as for our L2 is just going to completely supplant the L1, and is the L1 only going to exist to do some sort of super abstract stuff in the background? I actually don't think that's true, or at least not anytime soon, because I think that these L2s are a lot they're still quite new, and I think they're materially riskier to use, to put your funds on, than Ethereum L1. And so I think that there's still going to be a lot of people who just aren't willing to take that risk. If you have $10 million, are you going to put all your $10 million on Optimism? I think that there's still Ethereum L1 is the safest place for your assets, and there's so a lot of the assets are going to stay on Ethereum L1, I would say, and so Notional is going to be there as well. So we would look to integrate L2s for sure, but I don't think Ethereum L1 is sort of going away anytime soon. Yeah.
Nice. Ainsley, what's Derivadex thinking?
Yeah. I think this is an interesting question. This is also, in my opinion, one of the coolest things that we've been working on is I think just to kind of overview the structure, Derivadex uses Ethereum L1 for settlement and for security, and then matching and execution happens on a custom off-chain network, sort of like a custom L2 that's basically purpose-built specifically for this project, for derivatives matching. And that's a kind of an investment in the engineering side that like has taken a lot of work, but has allowed the protocol to kind of optimize at every moment for something that's required, like for the things that benefit specifically a derivatives exchange. And I think that one of the things that's been really freeing about that is that we don't have to worry about the scaling constraints. We don't have to worry about a lot of the design support that's required for when you're working with an L2 that's being built by another party, for a maybe multi-purpose L2, an L2 that's intended to support different applications. And I think it's also interesting to contrast it to, say, an app chain, where suddenly you're responsible not just for the system being fast enough to do what you want in terms of settlement and execution, but you're also then you're really responsible for thinking about what that L1 security picture looks like for your exchange.
Nice. Now I want to get you talking, Yenwen. All right, so people often make comparisons between Perpetual Protocol and DYDX, and I'm just curious if you guys are even considering this moving to like a sovereign chain, moving to your own thing, or if you guys plan on staying on in the Ethereum ecosystem.
Yeah, that's a good question. So, yeah, because we kind of compete with them, so we will not have. No, just kidding. I mean, we want to stay on ETH. I mean, I think app chain. I mean, moving on to app chain definitely there are lots of advantage. You know, you can kind of like design your own gas fee. You have a lot of advantage on that. But I think the thing you lost actually is pretty huge. You lost the whole composability with all other projects. We've been like working with many other projects. You know, like there are other people building on top of us, doing like basic trading, giving votes, like building a stablecoin on top of us. So it's really hard to give away of that advantage that we can be composable with others. Yeah, so I don't think, I personally think that composability is the number one, like top one feature of DeFi. So it's really hard to give it all. Yeah.
Another question for you. So I've seen Perpetual Protocol claim that it plans to no longer be limited to crypto. You know, that you guys will include Forex, commodities, and stocks. Now, would you be able to kind of expand on this? Like, will you guys maintain the decentralization in your plans to offer these TradFi assets?
Yeah, so I think that's definitely something we can do. We did research on this. I mean, like, try to bring like gold, silver, other kinds of like asset that people can trade on Perpetual Protocol. But I think the reality is not a lot of people from the community or looking at other exchange, they want to trade asset other than crypto. That's just like something, that we thought at the beginning that it's really powerful, but in the end, it doesn't really kind of like get a lot of support from the community. Also that, we have been talking about like, we should kind of like let the community, self-serve, create their own market. I mean, like for the like smaller cap, like crypto asset or other kinds of asset. But in the end, I think we have like tried different ways to prove it. But in the end, I think the community still trade those like big market cap tokens like BTC, like ETH. So, it's just like something when we start, we think that's a really interesting feature. But in reality, I don't think the market is there yet. We probably need to wait for a while and then to bring. Maybe like in 2 years, 3 years, people are more willing to trade traditional asset or like smaller cap like crypto. Yeah.
And is this all going to be on chain, kind of on a like a non-custodial platform and whatnot? So I'm trying to work out the mechanics of moving TradFi assets, on chain like that.
Yes. So for Perpetual Protocol, we want everything to be on chain. So the only thing we need is, like, for example, if we want to trade gold on Perpetual protocol, the only thing we need is the price fee of gold. And right now we work with Chainlink to provide that price fee. Once they have that, we can actually trade that asset.
I see. Nice. And to Ainsley, because I want to learn a little bit about Derivadex. So, you know, I see that you guys, the Dex Labs is behind this, and I noticed that you guys have some pretty big investors, you know, like Coinbase, Dragonfly, Polychain, and I'm kind of curious why do you think they think users are going to come to Derivadex, and kind of what do you guys offer that's going to be different than a normal derivatives exchange?
Yeah, it's a good question. I think that what is most interesting to me about Derivadex is kind of twofold. One, and a big part of this is the is kind of the technical approach that that the exchange has taken towards matching and execution. And so Derivadex is a central limit order book exchange, and so that's in contrast to like AMM models or other types of where the liquidity comes from stakers. The goal of the exchange has been to make it so that the matching engine is decentralized, is run on a network, but can support traditional modern market making strategies. So that is an approach to liquidity that will make Derivadex competitive with centralized exchanges. And that's like kind of a big angle of Derivadex and one of the areas that hasn't compromised on. Another aspect that I think is really promising is formally how it's structured on chain. So in order for the exchange to be even deployed, in order for any exchange parameters to be adjusted, everything has to go through the governance contracts. So this includes who the operators of the exchange are. So the machines that are actually running the matching and execution engine are specified and controlled by the DAO, as opposed to any single company or entity. And the DAO is also responsible for controlling all kinds of parameters of the exchange, in fact, every parameter. So part of that is pretty accessible because it's in the contract parameters, so you can kind of set things like leverage limits, you can determine what assets can be listed, kind of to your question earlier about like how do exchanges decide what assets to list. In Derivadex, that's entirely up to the DAO. That doesn't mean everything should just be listed. Hopefully it's a DAO that takes that process very seriously and thinks about the risk exposure of assets, thinks about the liquidity and so forth. But architecturally, it's possible. And because it's working with perpetual swaps, a lot of that stuff formally is possible because of how the price feed works and how the funding rate keeps the price of the asset on the exchange in line with the external reference price. And so I think that's something that, from my perspective, is like extremely flexible and potentially very like competitive with what people outside of the decentralized exchange world really expect and want to see. So I think that's something that, that's how I would, that's what makes me excited. Can't speak to specific people, but that's what I think is the coolest part.
Nice. And kind of like, who do you guys envision as some of your end users? Like mostly retail, or do you think you'll kind of have some institutional grade products as well?
Yeah, what do you think of as an institutional grade product? Like, what do you have in mind when you say that?
Something like prime brokerage, or like how centralized exchanges have tiers and how they kind of cater specific services to bigger net worth clients.
I see. That's what I understand. That's a really interesting question. One of the groups of users that we do a lot of like research with and that we like work really closely with are algorithmic traders and market makers and other people who use exchanges like in a high volume way or in an institutional way. We also do plenty of like interviews with people who do it more casually or from like more of like a user perspective. And I think one of the really cool things is going to be being able to support institutional like type products in a way that's like really transparent. And I think that's maybe a little bit different from how centralized exchanges operate, where you don't know necessarily who else is involved with the exchange, you don't know what deals they're getting. I think this is something where there's going to be a lot more transparency than there ever has been before, which I think is actually really cool and good for the industry, because I think centralized exchanges have not been exactly like positive players always, and
no,
I think
not 100%.
I think there's a lot of room for things to be changed on that front. But yeah, those are groups of people that we work with really closely to kind of design the product features and talk through what the requirements are.
Interesting. Nice. Now I'm curious also for Notional and BarnBridge, if you guys have any plans to build products to cater to any enterprises at all. Because one of the things I've noticed at least is the amount of money in DeFi just from 2020 to 2021 exploded. And this was largely off the balance sheets of enterprises and whatnot, especially when you look at something like futures trading volumes. So.
Yeah, sure. So on Notional, actually, so I think unlike a lot of other DeFi protocols, in general, the sort of dollar value for Notional's users is quite high. So, maybe it's the nature of the product that it's somewhat more sophisticated than a variable rate product. What we've just seen is that we have a relatively large amount of dollars per user relative to sort of other DeFi protocols. So actually, when it comes to what we're doing for retail versus institutional, it's more like the developments that we're working on with some sort of partner protocols are actually more focused on making it more accessible to retail or smaller dollar value users. For example, we're launching in a few weeks a few sort of actually with two different protocols, one with Future and one with Index Coupe. We're launching kind of like bond ETF products. So they're products that lend at a fixed rate on Notional and then sort of manage the maturity selection as well as the sort of rolling over the loan. So it gives the end user like perpetual exposure to perpetual and passive exposure to the rates available on Notional. So it actually makes things simpler and just sort of, and the point I'm trying to make here is that in many ways Notional is already it's built kind of for institutions in the sense that
But it can service everyone.
Yeah, it can service everyone, but in many ways the things that we have to do more work on is actually not making it more accessible for institutions, but making it more accessible for retail.
Okay. And how about you, Tyler?
I think that if we're successful at doing this, the DAOs themselves become the institutions. So we have to lower the barrier to allow retail or everyday users to get in. So when y'all were talking about the L2s earlier, I think it's existential that BarnBridge ends up on an L2 because for the capital efficiency of things like fixed income and perpetuals, if you're the DAO itself of BarnBridge, if you're talking about $100 per DAO vote, someone has $1,200 worth of BarnBridge, they're not even able to involve themselves in governance. And you can say the same thing about a $1,200 deposit into a fixed income protocol. If it costs $100, then you're taking 10% of the fee immediately and just giving it to MEV, right? And so I think that, even if you're looking at Optimism versus Arbitrum, what Arbitrum's doing with the hyper low fees is extremely impressive and attractive because at the end of the day, if we don't have there's really no point of DeFi if we did this just to go get a bunch of deposits from Goldman Sachs. At the end of the day, the attractiveness of it is the transparency in the system where every single user, whether you have $10 or whether you have $10,000 or $10 million, is able to get the same rates transparently and see in the system where all these things are being deposited. So if we're just building this to go say what's up Goldman, I think we probably failed as an industry. But at the end of the day, we also need to optimize for Goldman and not say that that's a bad thing. But the way I view BarnBridge probably changed in the past year substantially because I viewed a lot of what Olympus came up with the concept of protocol-owned liquidity. If you look at something like Aave, I mean, Aave is making $40–50 million a month off their own protocols, fees, and liquidity. Well, that becomes a pretty dangerous player when they can deploy their own capital into these systems and subsidize things for end users. So yeah, at this point, I would say that I think the BarnBridge DAO's role is to create attractive products that anybody in the world can use by acting as the institution itself.
Awesome. And Yenwen, I'm curious because the dollar value in perp volume always seems to be extremely high, you know, but the actual users are like a few thousand per month. So I'm curious if you guys have any ideas or plans for how to kind of scale the amount of users that would end up trading perpetuals.
Yeah, that's actually an interesting question. So, yes, I think that it depends on the system. I mean, for us at Perpetual Protocol, it's an AM design like Uniswap. So we have arbitrager, we have you know, like just like takers or like normal traders. Arbitrager took lots of volume, so that's I mean like that's just like how you design. So we have like many bars like trading on the system. So like some people question about this, like it's not organic traders, but personally I do. Actually, I think that I mean like just like in DeFi or like in the financial system in the future, actually people or traders should actually program their own bot and then run their own strategy. They shouldn't like, you know, like just use the interface and place a trade like once a day. They should come up with their strategy, and we actually, you know, like provide like source code, like GitHub repo that to educate people to do that. Okay. And that's just like one of the things that I know that, you know, like we want to get more users. I mean, but a perpetual swap is kind of like, it's more for the, you know, more sophisticated traders. Mm-hmm. But we actually encourage them to actually build their own bot, build their own strategy. We work with like Hummingbot to actually use their platform to make like writing your own strategy easier. I think that's actually, that's what we believe that's the way to go. So it's really hard to tell like, you know, like how many like organic users we have, because I'm more in belief that in the future it will be like, you know, like program traders war in the future. Yeah.
Awesome. Yeah. And to wrap up, I'm just kind of curious, what is on everybody's respective roadmap to help envision kind of the future, a positive future, the future that we want in DeFi? So let's start with Ainsley.
Okay. I think that something that Yenwen touched on is actually really critical, which is this question of who's the user. And I think especially when you're building DeFi products, like, and you're working in Web3, it feels sometimes like there's not enough users. But I think that being thoughtful about what you're building and trying to make a product that really has like an inherent value add to the world is so much more important than having more people come to your platform. And I think we've all seen lots of exchanges that, you know, blow a whole budget on marketing, try to get user numbers as high as possible, but have actually not contributed anything novel, anything useful, or anything that adds value to the ecosystem or to the world. And I think that there's a lot of opportunity, especially for derivatives and perp swaps, to do that because they're such novel products. But I don't think there's any rush to like promote these to people who don't understand, who are not sophisticated enough to trade these products. And so that's something that I think we're designing a system that can accommodate, and I'm pretty like committed to. So,
awesome.
Yeah.
And Teddy, briefly, does Notional, how is Notional envisioning a good DeFi future, and what are you guys planning?
Sure. So, you know, without getting into sort of like technical or product specifics, I think, you know, what, you know, something that, so like I would say committing to building things that I think really leverage what's really good about DeFi versus the traditional system. And I think that, like, you know, traditional finance is a human-based system. It works off of personal relationships and English language-based smart contracts. There's a lot of ambiguity there, and like human relationships really matter in that system, and so it's sort of like, matters who you know and where you went to school and like who you grew up with and things like that are really important in traditional finance. And alternatively, DeFi allows you to build a system that is based off of code instead of English, and is like not a human-based system. And what that allows you to do is like to extend the exact same opportunities and rules to everyone, no matter who they are. And it's like a perfect meritocracy. And I think that is really important. And that is like a, it's abstract and conceptual, but I think that is like one of the things that is actually important about DeFi. And we want to commit to that. Yeah.
Awesome. We're going a bit over, so Tyler, if you have anything brief to add to that as well.
Yeah, I would just say that I think that with the increasing depth in perp liquidity, that we're approaching a point where decentralized finance is a fully functioning financial system that you can ultimately do everything on. We have capital markets, DEXs, derivatives, fixed income, variable income. And so I think that at some point, it's not one of those things where you say everything that is like worth inventing in the history has already been invented, or that famous saying. But it is getting to the point that I think that we probably will need less robust protocols being built going forward, and we need to be building entire companies on top of this robust financial system that we've built. And that's the layer that we ultimately can utilize to do things like KYC and AML if those things come into the market. So yeah, ultimately I think that going forward, the user experience and applications and L2s are ultimately going to allow us to build like a Fidelity-like interface on top of all of this stuff. And I'm excited for when that comes.
Awesome. Yenwen, any final words?
Yeah, agree with Tiger that, like KYC might come. I personally believe that KYC will come in the near future. But I do hope that, like Perpetual Protocol, we can kind of split in two. So one part of Perpetual Protocol, we can support KYC, but the other part for, people who really care about privacy, they can still use that. Like it's not like everyone just go like one way or the other. Yeah. I hope that there will be like both worlds can coexist.
Awesome. Thank you. Thanks for the conversation, everyone. We're out of time.
Thanks, Micah.
Yep.